Hi, this is Michael Joyce from Agility, your personal CFO, and I'm pleased to share with you our post-election special video. As we all know, we had a presidential election just last week, and while the results are still being contested in some cases, and there will be some recounts in some states, unless there's a change of several 100,000 votes in different states, it pretty much looks like Joe Biden's going to be elected president. It also looks like the House of Representatives is going to maintain a diminished majority, and subject to a couple runoffs in Georgia that will be held in January, it seems likely that the Senate will remain in Republican hands. Coming into the election, one of the things that we were concerned about was something that we were calling election chaos risk. And that was that the loser of a very close presidential election, which this turned out to be, would say that the results were rigged, and there would be a sizable portion of the population that wouldn't view the election as being legitimate. And that would cause some chaos, which the markets don't like chaos. That hasn't come to fruition so far, but with all the things that could happen over the next couple weeks or maybe even the next couple months, that still could be something to keep an eye on, something that we'll need to worry about. But also remember that this election is not in a vacuum. There's other macro factors that are impacting the investment markets, the biggest one being the COVID crisis. Right now, there's an uptick in the amount of coronavirus cases, which is something that has been expected for months. I mean, this really shouldn't have been a surprise to anybody. We've been talking for months that when the weather started getting cold, that people would start to move inside and some of these cases would start to rise. But we also have to consider that even in the past couple days, there's been some heartening news on the vaccine front. It does appear that that there will be some vaccine, at least one vaccine that will have experimental approval maybe by the end of the month, and that we can roll it out over a 6 to 8 month time frame. I don't mean to downplay some logistical problems in mass vaccinations, but this is actually some pretty good news. So the investment markets have actually reacted pretty strongly post-election. But what's been interesting is there's also been a little bit of a rotation in the investment markets. The things that have led the markets, i.e. technology stocks like Apple and Amazon and Facebook, have really been the reasons why the stock market is up for the year. But as we've talked about before, it hasn't been a broad-based recovery in stocks. And the average stock, actually the median stock in the S&P 500, is still down for the year. But there has been a rotation from some of these high-flying technology stocks to some value-oriented stocks. And whether this is a trend that has legs, we don't know. But what we do know is that when things are trading below their long-term intrinsic value, at some point they will reflect that value. And so maybe this is the start of this. We also have to think about the post-election landscape in terms of taxes. Joe Biden had in his pre-election platform of raising taxes, notably on capital gains, for example, where people that made over $1 million would have their capital gains taxed at ordinary income tax rates rather than preferential long-term capital gains rates. And there was also a point in his platform where they would lower the estate tax exemption from $11.8 million to $3.5 million. So what we were saying even before the election is that no matter who wins, it's likely at some point taxes are going to go up. Remember, we had a big stimulus back in the spring that cost trillions of dollars, and there's going to be another stimulus package. It may not be as big, but it's going to be pretty big. And that's going to have to be paid off or paid down. I mean, even if it happens over a very long period of time. But we also didn't think that it was likely that taxes were going to go up in 2021 because the economy is still going to be in a fragile state, and our thought is that a Biden administration would not risk cratering a nascent recovery by putting in some big tax hikes. I also want to mention that because there's likely to be a Republican majority in the Senate, a lot of the tax hikes that maybe a Biden administration would want to put through anyway may be put on hold at least through the midterm elections in 2022. I've been in some meetings with some tax professionals and some CPAs that have been talking about some of their clients that have been accelerating capital gains into 2020 because they think it's going to be taxed at a lower rate, because they're pretty much thinking that capital gains tax rates are going to go up in 2021. Likewise, they're making some moves to reduce the value of their taxable estates to below $7 million. In our opinion, this is a mistake. If you were nearly 100% sure that taxes were going to go up in 2021, we'd say, okay, maybe this is a good move. But it is far from certain. In fact, we would say it's probably unlikely that the taxes are going to go up in 2021. So we would advocate that you at least take a look and see what's going to happen rather than making moves on things that may happen and things that may not turn out that you would like to have in the future. I mean, time and time again over my long career, I have seen when people make some moves to reduce taxes because they thought tax rates were going to go up. And in many cases, this just didn't happen. So they made some moves that they came to regret, and in some cases were really hard to unwind. So the next couple weeks, the next couple months are going to be pretty exciting. We're going to see a lot of different moves on the investment side, on the tax side, and in other areas that may impact your finances. So we would encourage you to stay in touch, stay tuned. If you have any questions, certainly feel free to give me a call or to contact your financial strategist at Agili, and hang in there.